Hello and welcome. You're with us here on Business Today. I'm Abha Vakaya. Here are the headlines tonight. Stock markets remain subdued in trade after a strong opening. Mid-cap and small-cap indices down more than 0.5%. US Fed shifts its target to inflation, holds interest rates for now but will raise them thrice next year. Bond purchases to end by March. Government to rework cryptocurrency bill 2021 may introduce it in the budget session. It's a big Business Today TV exclusive. Heartburn among many in the U.S. after Indian origin CEO in the U.S. is granted a record-breaking pay package of $2.3 billion, second only to Elon Musk. And those looking for a 7-seater SUV get another option. Kia debuts its Carens in India, launch slated for early next year. Rebounding after 4 days, markets ended a volatile session on a positive note today, mirroring positive overseas cues. The Sensex ended 113 points higher, just shy of the 58,000 mark. Nifty made meager gains to end above 17,200. IT, oil and gas and consumer stocks were the top gainers. Infosys, Wipro, BPCL, Reliance, some of the other movers in trade today. The gains, however, were offset by losses in financial, automobile and pharma shares. Top laggards included Cipla, Sun Pharma, ICICI Bank, Bajaj Auto, among others. After falling to its lowest level in 20 months yesterday, rupee today bouncing back sharply to settle stronger versus the US dollar. The currency recovered 15 paise from yesterday's close. Sources say the rupee's recovery was guided RBI's intervention in the form of dollar sales. The US Fed decision to hike interest rates beginning next year also helped the rupee gain some strength. Inflation has finally overtaken economic slowdown as the primary target of the US Federal Reserve. At the end of its two-day policy meeting, the US Central Bank decided to hike interest rates thrice by the end of 2022 and hasten its tapering to end bond purchases.
We are phasing out our purchases more rapidly because with elevated inflation pressures and a rapidly strengthening labor market, the economy no longer needs increasing amounts of policy support.
Clear signs from Chairman of the Federal Reserve that interest rate hikes are on the cards. The US economy is on a roll with near full employment and more than expected growth rates. The big concern now is inflation, which is expected to hit 2.6% next year, a level considered high in the US. As a result, the Fed has decided to end its pandemic-era bond purchases in March and hike interest rates by a 0.25 percentage point thrice by the end of 2022.
We are committed to our price stability goal. We will use our tools both to support the economy and a strong labor market and to prevent higher inflation from becoming entrenched. We will be watching carefully to see whether the economy is evolving in line with expectations.
US market ended higher, encouraged by the Fed holding rates for now. The Dow Jones closed up over 1% and the S&P 500 was up 1.63%. The Asian markets also reacted positively, with the Japanese, South Korean indices closing up. The Indian markets also opened positively before losing the gains later in the day.
It may not have a direct impact because, unlike back in the day when Indian markets were really dependent on FII flows, today we have a very robust, large domestic market where domestic institutions, particularly the new, retail investors who invest through mutual funds and even, directly into stocks, they make up for a large portion of our markets.
The low interest rate regime seems to be ending in India as well. The RBI held off on hiking rates in its latest policy announcement, but is expected to do so early next year. Interestingly, the country's largest bank, SBI, has already taken the first step by hiking its base rate by 10 basis points on Wednesday. Bureau Report, Business Today Television.
Meanwhile, a day after the US Fed decided to hold rates for now, the Monetary Policy Committee of the Bank of England voted to increase the bank rate to 0.25% from 0.1% and also to maintain the amount of quantitative easing at £895 billion. In what could be the beginning of a period of rate hikes, the country's largest bank, SBI, has increased its base rate by 10 basis points. This will impact floating home loan rates and new auto and personal loans, making them more expensive. There is no corresponding benefit, though, for the middle class with deposits in the bank. The public sector bank has left interests on FDs below 2 crore rupees untouched. It has, however, hiked rates on FDs of over 2 crore rupees by 10 basis points. All hikes are effective 15th of December.